Good morning. So we have section 54F, which is the last section in this chapter that needs to be discussed. So far we have discussed section 54, 54B, 54D, 54EC, and this is the last section, section 54F. And this section 54F is slightly unique, and another important feature of this section is that this section also resembles one of the other section which we have already studied. So I mentioned that this section is unique, but I'm also saying that this section resembles with another section. So let me justify these 2 points. The reason why this section is unique is because in this section, to determine the amount of deduction, we use a formula or an equation, because in all the deductions what we have done so far, all the exemptions what we have done so far, the exemption or the deduction is the amount what you're reinvesting in the new capital asset, or the amount what you are depositing in the capital gain scheme. Combined together is the deduction amount, right? For example, let's say gross capital gain we have already computed, which is rupees 50 lakhs. Okay, so the gross capital gain. And how do we get gross capital gain? First, we write down the sale consideration. From that, we deduct transfer expenses. Then we get NSE, or the net sale consideration. From that, we deduct index cost of acquisition, index cost of improvement, and after that, we get gross capital gain. Now, this gross capital gain needs to be reinvested in order to claim exemption. So let's assume this is the gross capital gain what we have got from the sale of residential house property. Okay. Now what we are doing is we are claiming deduction in which we are buying a new house property, and then we are also depositing the money in capital gain scheme. So new house property is worth 55 lakhs, and this assessee has also made some deposit in capital gain scheme which is worth 1 lakh. So what will be the taxable long-term capital gain? The answer is long-term taxable capital gain will be nil, because whatever gain has been made from the transfer of residential house property is being reinvested in a new house, and deposit is also being made in capital gain scheme. So the assessee has completely utilized this 50 lakhs and there is nothing left out. So therefore there is no taxable amount as such. But let's assume the new house property is 45 lakhs and this deposit is 1 lakh. So in this case, the taxable amount will be 4 lakhs. So this is what generally we do. But this section 54F is unique because the so-called deduction amount here should be calculated by applying a formula. We straight away can't deduct amounts like this. It's not permitted. But rather apply the deduction using a formula. So that this is what makes this section quite unique and different, because in no other sections what we have discussed so far we use a formula for calculating deduction, but this is the only section in which the deduction amount is calculated with the help of a formula. So this is something which you have to remember, that in section 54F we calculate deduction by using a formula or an equation. Now what is this section 54F? Because the moment we study a new section, whenever we go through a section, first thing we have to do is we have to identify what needs to be transferred, what needs to be sold. So in section 54, what needs to be sold or transferred is a residential house property. In section 54B, what needs to be transferred or sold is an urban agriculture land. In section 54D, it is industrial undertaking or a land and building used for industrial purpose. In section 54F, it is any long-term capital asset. So in section 54F, what needs to be transferred? The answer is in section 54F also. This section does not specifically identifies the asset, but it just says that you can transfer any long-term capital asset, but it also says it can't be a residential house property. So this is something which is very interesting, because it just says you can transfer any long-term capital asset other than a residential house property. Whereas in section 54 EC, if you could recall, it is similar to this. It says you have to transfer any long-term capital asset, and the amount of capital gain which is realized from the transfer of any long-term capital asset needs to be reinvested in the bonds of NHAI and RECL. But here, similar to section 54E, here also it says you should transfer any long-term capital asset, but there's a condition, except residential house property. So the asset so transferred or sold can be any long-term capital asset other than residential house property. So this is what you should sell. Now with this money, what you should buy? The answer is, with this money you should buy residential house property. With this money you should buy residential house property or deposit the money in capital gain scheme. Now at the very beginning I said this section is unique because we have to use a formula to calculate deduction. And I also said this section resembles with one section which we have already studied. And which is that section? Any guess, any idea? Can anybody quickly mention it in the chat box? This section has a resemblance with which other section which we have already discussed? So section 54F says transfer or sell any long-term capital asset other than a residential house property, and the amount of capital gain what you have made from transferring that long-term capital asset, you should buy one more residential house property. Right? So roll number 2 from A section. The resemblance is not with section 54 EC. Yes, of course there is a resemblance because section 54 EC also says transfer any long-term capital asset, and section 54 also says transfer any long-term capital asset. But that's not the resemblance. The resemblance is section 54F says you should buy new residential house property, and this resembles with section 54F as mentioned by roll number 19 from A section. Right? So section 54 says sell any residential house property, and from the amount realized buy one more residential house property. This is what section 54 says. What section 54F says? Transfer any long-term capital asset other than residential house property, and with that money you buy one more residential house property or deposit the money in capital gain scheme or do a combination of both. So section 54F has resemblance with section 54. 54 says sell house property, buy house property. 54F says sell any long-term capital asset other than residential house property, and with that money you buy another house property. And the other conditions are also similar. In order to buy a new house, in case if you want to buy, you can buy 1 year before or 2 years after the date of transfer. And in case if you want to construct, you're given 3 years time to construct the new house from the date of transfer. So this is somewhat which is similar to section 54, which is already being discussed by us in the very beginning. Now, I said we should apply formula to calculate deduction. So what's that formula? Now, in order to calculate exemption, there are two situations. In situation 1, we don't use formula, whereas in situation 2, we have to use the formula. So this is the situation 1. Situation 1 says if the cost of new residential house property is greater than net sale consideration, then you don't have to use formula. Entire gross capital gain amount is exempt from tax. On the other hand, if the cost of new residential house property is lesser than net sale consideration, this is where you have to use this equation to calculate the exemption amount. Right. So how do we come to a conclusion whether to use formula or not? The answer is by doing a comparison of this. Only by doing a comparison of new residential house property with net sale consideration, we should come to a conclusion whether we should use formula or not. Now, just to illustrate when to use formula, let's have two situations here. So let's assume there are two situations, because you guys have to know when to use formula and when not to use formula. So this is our situation 2. Right. So as usual, we follow the same steps in all these sections. Doesn't matter which section we are doing, the steps will remain the same. So let's say sale consideration. Let's assume this assessee has sold land, which is a long-term capital asset. This is what is being sold, and from this amount the assessee has realized 50 lakhs. So here also let's keep the situation same, 50 lakhs. Then comes your transfer expense. Let's assume here it is 1 lakh, and also it is the same in both the situation. The transfer expenses remain the same. So net sale consideration will be 49 lakhs. Now, from this, let's deduct the indexed cost of acquisition. Let's assume the index cost of acquisition in both the cases is also same, 19 lakhs. Our gross long-term capital gain, which is so from here onwards, you should be little more cautious, because for deductions, we have to decide whether to use equation or whether not to use equation. So now, in order to claim exemption, the assessee should sell any long-term capital asset other than residential house property, and with this money, the assessee should buy a new residential house property. So let's assume the assessee has bought new residential house property, and the value of new residential house property is 50. And here the value of new residential house property is 45 lakhs. That's the scenario. Okay. Now, an important decision which you guys have to take is whether to use equation or not. So, in this case, value of new residential house property. Now you have to take a call whether to use formula or not. So when you're going for deductions, this in situation 1, what's the situation? The situation here is the value of new residential house property is more than net sale consideration. The value of new residential house property is more than net sale consideration. So therefore, what happens? No need to use formula. Entire gross capital gain is exempt. So what will happen is less deduction. You can deduct the entire amount. What is the value of new house residential house property can be deducted. So value of new residential house property is 52 lakhs. So you directly deduct 52 lakhs here. And after deducting 52 lakhs, what is left out? Taxable long-term capital gain. Left out amount is nil. That's it. Simple. Because the logic is simple. Whatever amount you have made as a profit, that entire amount you have used it as a deduction. And after using entire amount as a deduction, there's nothing left out because you have used more than what you have earned. So you don't have to pay any tax. So this situation 1 is normal to what we do in all the cases, what we have been doing. Only situation 2 is where you have to use the formula. So what is situation 2? So in situation 2, the value of new residential house property is lesser than the net sale consideration. So in this case, what happens? We can't claim full deduction the way we have done in situation 1, but rather claim the deduction by applying this formula. So apply this formula. What is the formula here? This is the formula. So exemption amount is equal to what is the gross capital gain? 30 lakhs. So write 30 lakhs here. Net sale consideration 49 lakhs. So write 49 lakhs here as a denominator. Now, what is the cost of new residential house property? 45 lakhs. And is there any deposit? Let's assume there is no deposit. So apply this equation, simplify this equation and write down the long-term capital gain amount here in the deduction column. So that's what you're supposed to do. So let's simplify this. 30 lakhs divided by 49 lakhs into 45 lakhs. We get 27 lakh 55,102 rupees. So the deduction amount will be this. So 45 lakhs, the gross capital gain amount is 30 lakhs, right? From 30 lakhs, you deduct 27,55,102. Your taxable capital gain, 2,44,898. This is your gross capital gain. From gross capital gain, you have applied the deduction, which is obtained by applying the formula. So the taxable amount will be this, right? So section 54F has resemblance with section 54. In section 54, you sell residential house property. With that money, you buy new residential house property. Whereas in section 54F, you have to sell any long-term capital asset other than residential house property. And from the money realized as capital gain should be reinvested in a new residential house property or do a deposit in capital gain scheme or combine both together. The choice is left to the assessee. And then important point here is in order to apply deductions, we should use an equation. In situation 2, in situation 1, we need not use the equation. So how do we determine these situations? By doing a comparison between the value of new residential house property with net sale consideration, right? So I hope you guys have got the logic and basic concept behind section 54F. Now I want you to quickly go through your handout, study material, and read the illustration on section 54F. So go through this illustration quickly. So first thing is to read the question, and after reading the question, you people have to identify whether this assessee is eligible to claim any deduction, and if yes, under which section. So what is being sold and what is being bought is something which you people have to identify. So as per the question, on 25th December 2019, the SSC has okay, she has two capital assets here. Point number one is diamond necklace, and the other one is diamond bangle. So both, whether it is diamond necklace and or diamond bangle, jewelry. So jewelry, even though it is a personal belonging, but it comes under the exception, and therefore it is a capital asset. Now, what kind of capital asset is this? Appreciating, depreciating, financial, intangible? The answer is it is appreciating asset. In appreciating asset, is it movable property or immovable property? It is obviously movable property. You can carry jewelry anywhere you go. And for movable property, what is the holding period? For movable property, the holding period is 36 months, which means up to 36 months you hold. It is short term. More than 36 months, it becomes long term. So she has bought this in 2005, 6, and one more item in 2011-12, and both are being sold in the previous year, which is 2019. So whether it is diamond necklace or whether it is diamond bangle, both are being held by the SSC for more than 36 months, and hence both are long-term capitals. So what she has done is she has sold both diamond bangle as well as diamond necklace on 15th June 2019 at different price points, of course. And from the money, what she has realized, she has purchased a new residential house property. So from the sale proceed of jewelry, she has purchased a new residential house property, and she has also deposited money in capital gain scheme. So SSC has sold long-term capital asset, which is jewelry, and with that money she has purchased a new residential house property. So she is eligible to claim deduction under section 54F. Now, what is the amount of deduction she is eligible to claim? Whether we should use the equation the way we have done here, or whether she is eligible for a complete deduction, is what we have to figure out. So if you want, you can do separate calculation like this, or you can do a combined calculation also. Both are correct, because ultimately the question says all the jewelry was sold, and both from the sale of diamond necklace plus diamond bangle, she has bought residential house property. So after selling both only, she has bought a residential house property. So if you want, you can combine the amounts and then do it. When I say combine the amount, combine the sale amount, combine the cost, then apply the deduction, or show separately, then total it, and then apply the deduction. The choice is yours. So what is the sale consideration of necklace? So necklace was sold. She sold diamond necklace for 20 lakhs. 20 lakhs is the price for it. 20 lakhs is what the necklace is being sold for. Diamond bangle is being sold for 32 lakhs. Now, what is the transfer expense? Is there any transfer expense? As per the question, there is no transfer expense as such. So net sale consideration, sale consideration will be the same. So if you can write total also here. 50. Then comes your index cost of acquisition. Okay. So calculation of ICO. To be used, you are familiar now. This is bought before 1st April 2001, so we have to use this equation. COA divided by So COI divided by CII of into CII of previous. So first is this. What is the cost of acquisition of necklace? So necklace is acquired for 8,20,000. Divided by CII of acquisition year 11 into CII of the previous year, uh, CII of previous year. It's given incorrectly here. I want you to change it. It's 289. It's 272. So please change this to 289. How much would this be? So this will give you 20,25,470. This is the IC for bangle. The cost of bangle. Bangle is obtained for 12 lakhs. And CII of the year of purchase or acquisition is given here, which is 167. Into previous year's CII, which is 289. So this will give you 20,76,000. Now, if you realize this, you out that in case of bangle, there is a loss long term loss, and of uh, necklace there is a loss. In case of bangle there is a profit. So we'll adjust this loss with profit. Is the loss 25,470. What is the profit? 11 lakh 23 3. So when you adjust the loss with profit, what is the total you get? 10 lakh 97. That's the profit from the sale of jewelry. Less so which situation are we that needs to be applied or understood here? So let's do that. So in order to calculate deduction, what we have to do, compare value of new residential house property with net sale consideration. Residential house property with we have two situations. Situation one is where new residential house property is greater than net sale consideration, and situation 2, opposite to this, the value of new residential house property is than net sale consideration. So what's the situation in this problem? We are in which situation is what you have to determine. So let's write down the amount, value of new residential house property. First write down that, which is 40. Residential house property. Okay. Net sale consideration combined together 52 lakhs. So what's the situation? Are we in 1 or 2? Let's write down. Therefore, we are in second situation. Wherein the value of new residential house property is 48 lakhs and net sale consideration is 52 lakhs. So are we in situation 1 or 2? So value of new residential house property is lesser than NS. So we are in situation 2. So therefore use equation. So let's apply the equation now. Same what we have here. And what is the gross capital gain? Divided by net sale consideration, 52 lakhs. Into cost of new residential house property, which is plus deposit in capital gain scheme, which is 2 lakhs. So add this 2 lakhs. So now simplify this equation. So when you simplify this, you get 10 lakh So let's go for deduction. Nothing, anything is left out, that will become taxable long-term capital gain. So the taxable long-term capital, 42,000. Okay, so that's how we compute deduction under section 54F. So if you people have any questions, any doubt, not only in this section, any section or any concept of this chapter, because this is the last illustration of this unit. So in case if you have any doubts, any questions, you can go ahead and get your doubts clarified, rectified. In case if you're not able to recall any doubts now, you can do it later. Anytime you can send me a message on MS Teams. So I'll just unmute you guys so that if you have any questions, you can ask them. So over to you guys now for any questions.